How much do you need to actually purchase your first home in Australia today?
There's a couple of different options that you can kind of go around it. Your contribution that you would need, including government costs, a bit of a buffer as well for anything coming up, is around 10,000.
By the time they're saving, the property prices are rising, generally never outsave property growth. That time out of market again, you're sitting out of market, the property prices are going up, that could cost you 50 or 100 grand.
So 10,000 will get you a 700,000 house and land package with your first homeowner grant.
Incredible. Change those people's lives. So I love that. Welcome to Own It, the property podcast. Open chats about money, finance and property and everything in between. I'm Adam Schall. I'm the founder and owner of Locale Property Group. Today, we're recording on the land of the Whadjuk Noongar people. Today, we're going to be talking to Brad Linford, our head of finance for Locale Financial. We're going to find out what you actually need to be able to get into your own home. A little bit about Brad. So Brad's got over a decade of experience in finance and banking. Most recently held a position across South Australia and Western Australia for the home loan division at Macquarie Bank, and is now leading our team here at Locale Financial. So welcome to the podcast. Thanks for coming along. Obviously, you're our head of finance for our Locale Financial division. Love to hear a bit about you and what makes you tick.
A little bit about me. So I'll start personally. Originally from the UK, Southampton, don't hold it against me. I started my finance career in banking, better part of a decade and a half ago. Originally starting as a home lender myself in the bank. And that's kind of where my passion for property and finance came into play. And then the next kind of 10 years was spent across various home lending teams and operations, leading home lenders and risk and compliance. And then once that finished, my next step was really looking for something that was values driven and where I could kind of take all my experience and bring it together and kind of collaborate as a team. And that's where we're here now.
Nice. Love it. Love having you on board.
Oh, I'd love to be here.
What sets Locale Financial apart from other brokerages you've seen?
Look, probably there's a couple of things that stood out right away for me. And to be fair, there's some fantastic brokers out there. So I don't think it's about setting us apart, but it's around concentrating on what we want to deliver. The first thing was actually when you gave me a call and actually we had a conversation. I think the first 20 minutes was just hearing your passion about the Locale Property Group as a whole. That was the first thing. And actually seeing that from the top down and everyone's kind of aligned, same vision, same kind of direction they're looking, and it's always people first. So you hear that thrown around a lot, but to put that in practice and see it, it's actually really refreshing. That's one piece, but it's also the way the group's set up is really just the whole customer lifecycle journey. It's not around just getting a purchase, just getting a construction lending someone into their first home. It's around actually understanding what their full picture is, getting them their first home, moving them through. We can then put them in touch with our property investment. It's a full customer ecosystem across, and it's just we've all got the same end goal, and that's the customer outcome and customer experience. And actually just seeing it day to day, it's just, like I said, really refreshing to see.
Tell me a story on a situation, potentially one of our customers that you worked with in Locale Financial and something that you achieved that you feel is something you're really proud of.
Yeah, I do have one in mind, and this is kind of the essence of what we represent here. So there was a first home buyer, a family, 2 kids. Initially, they'd come through and we were looking to put them under one of the government schemes.
Yep.
Through kind of the needs discovery of one of the brokers, we then understood that that potentially was not going to be an option due to some things happening on the credit files and some things fitting outside that. So we then explored options workshop where we potentially could look to find a lender that would be suitable. We then found a lender with a lower deposit option for the customer, but to be able to go to that particular lender, there was a few kind of things we needed to do. We needed to pay out some debts, and we also needed to remove a default off a credit file that basically was put on there. It wasn't their fault, basically. That was a couple-month process. So there was a good 2-month process. It was basically back and forth with the customer, with different business partners outside, basically all bringing it together for the end goal of getting the home loan. This was lodged in like February of this year. We got formal approval May, 3 months.
Wow.
Now people can say 3 months. Wow, that's that's a long time for a formal approval. But the way I look at it is, if we didn't have Anchored, if we didn't have the whole team kind of working collectively, that we could have just accepted that no, and they wouldn't be in our family home.
Absolutely.
So the fact of, it's all the thing, it's not around what we say to you. The biggest piece is everything that goes on behind the scenes that you don't see is what sets you apart.
Absolutely.
So that was a really good news story, and we shared it across the group.
Yeah.
So we shared it across the group because, we want to celebrate those stories, and the fact we put a family of 4 in there, forever home. That's again, such an important milestone.
It's such an achievement. And like you said, so many companies would have gone, this is probably too hard. Let's park that up. Let them save more money. Let them get a credit file sorted themselves.
Absolutely.
They may have never done that, and they probably wouldn't be in a house today. So they're now in the property market. They're now getting capital growth on that property. They're paying down a mortgage. It's theirs, not paying their landlord's mortgage. So
absolutely,
incredible. Change those people's lives. So I love that.
Yeah, they were absolutely ecstatic as well. And just seeing that, that's for a broker, that's the most memorable feeling. That formal approval call, nothing beats it.
No, exactly.
Nothing beats it.
Exactly. Yeah, I love that.
Yeah.
So let's address the elephant in the room. How much do you need to actually purchase your first home in Australia today?
Yeah, it's a good question. And especially for first home buyers actually trying to understand it, because I remember when I purchased my first home, if it wasn't for me actually being in the Bay, I wouldn't have had a clue, and I probably wouldn't have been in the market in the time I was. So there's a couple of different options that you can kind of go around it. So the lower deposit option, basically where you don't need to contribute as much as your family guarantee. So that's a guarantor where your parents, your auntie or uncle, may leverage their security to be able to help you with the deposit, which means you don't actually need to contribute anything from a cash perspective. Now, that's not available to everyone, but that's one way to get in the market straight away with a low-cost option and still being accessible to the best rates.
Yep.
Second option, which I'm seeing really regularly, is let me just put an example. For WA, we've got a particular lender with a low 2% deposit. Let's base it on a $700,000 house and land package, and say the land's 350, you've got a construction cost of 350, and I'll run the numbers based on that. So 700,000, you're thinking, oh, so 5% on that is 35,000. Not the case. So basically 350,000 land, 350 construction with a 2% deposit. First home buyers will also be entitled to 10,000 first homeowners grant, part of that, and then also no stamp duty. So put in perspective, with no stamp duty is, you're saving tens and tens of thousands by doing that. Also, by going through this particular lender, you're saving about $30,000 in lender's mortgage insurance, because it's a 2% deposit without lender's mortgage insurance, which is a fantastic way to get in. Your contribution that you would need, including government costs, a bit of a buffer as well for anything coming up, is around 10,000. So 10,000 will get you a 700,000 house and land package with your first homeowner grant. But also just there will be a conveyancer cost, which is basically to support you in getting you settled, and your budget roughly around $1,500 to $2,000 for a conveyancer or settlement agent. Cool. So $10,000 to get you a loan, another $2,000 for your conveyancer to get settlement costs, and you got $12,000, and you've got a house and land package of $700. That's impressive.
Absolutely.
And achievable based on the current market. We know how much the market's increased. So based on that, it's actually a really achievable and realistic goal to kind of work towards.
Absolutely. And there's a lot in the media about how hard it is to get into the market, and no doubt it's absolutely shifted, and the prices have gone through the roof, and it is becoming harder for every generation to buy a home. But with products like this specifically for WA, which is Key Start, it's incredible. There's a real leg up, and $12,000, whilst it's a chunk of money, it's a pretty low barrier to entry to get into a property.
Absolutely. I think, and even seeing the shift in the last 5 to 6 years in, there's more of a kind of common sense approach. We understand we're going through living cost pressures. We're going through, these market rises, which is making it harder to get into the market. So then the lenders are kind of, their policies are, more of a common sense approach rather than this is this and this is this. It doesn't fit.
So it was hard and fast. They're definitely being a bit more fluid, and if it's a good applicant, that it's has got a solid income, and they've been saving well.
Absolutely,
they're definitely going to lolook at it on its own merits, which is really nice to see. It's not hard and fast, and they are genuinely trying to help people into their property market.
Definitely is, yeah. So $10,000, and
off we go.
Get their house and land package on the way.
Yeah, love that. Awesome. You mentioned lender's mortgage insurance, so tell us a bit about that and why that's such a large cost.
So lender's mortgage insurance is, just to explain what it is, it's basically the bank takes out an insurance when the deposit's not as high as, let's say, 20%. So 20% is usually your 20% deposit means you won't be paying LMI on basically every lender that you that we have available. Anything under 20%, there is an associated lender's mortgage insurance, and this is an insurance that the bank takes to kind of protect them in, the worst case scenario, and that's if it was to default. It's an upfront cost, but you can capitalize it into the loan, so it's not something that you actually need to kind of save and then contribute. It's something that will be capitalized into the loan, and it's once off at the start of when you take it out. Importance of that is it does allow you to get in the market sooner.
Absolutely.
We do have, people talk about lending mortgage insurance is like, oh, well, I don't want to pay 20, 30,000. The way I look at it though, is if we look at a market we're in at the moment, is if we looked at a 5% deposit, we did pay lenders mortgage insurance 3 years ago, that 20, 30,000 and your capital growth of say 150, 200,000 far outweighs that upfront cost.
Absolutely.
And the interest that's kind of capitalized onto the loan. So it's just, I wouldn't always take it with a negative sentiment.
Absolutely.
It's all dependent on the individual circumstance.
Absolutely. Like you said, there's two perspectives, and I believe speed into the market is a strength. No matter what, get in as fast as you can. Obviously, be strategic and don't put yourself in a situation that stresses you out.
Absolutely.
But speed into the market's key. Same with debt. People like, I want to save more deposit so I can have a lower mortgage. Yep. By the time they're saving, the property prices are rising. You can generally never outsave property growth. So
spot on.
As soon as you can get in, pull the trigger, make it happen. And often your first home isn't a forever home.
Yeah.
We're seeing it more and more where people get into the market. They might be rentvesting initially, or they get a first home that maybe like a stepping stone. So speed into the market's key. Live in your home for a period of time, and then maybe upgrade when the time is right.
100%. And I can probably share a personal example of my first home. So I bought a 2-by-1 apartment. And I always had in my head that I wanted to, eventually rent that out and hold it as an investment property. So when I first got was looking into it and looking at the loan options and what I could do, it was very kind of structured in the way I knew what my plan was. And now my first home, I was lucky enough to be able to have, so my mum is the guarantor.
Nice.
And I done that to kind of just get leading rates in the market. Didn't have to contribute as much as I'd be able to kind of save that buffer. But it also, did save on that lender's mortgage insurance by having that additional security there.
For sure.
Within 2.5 years, we revalued the property, saw the capital growth in it. From there, what I was able to do was leverage that equity, turn that into an investment to purchase another home. And there would be, in 2.5 years, there was no way I was going to be able to save, say, a 10% deposit just in cash, no matter what I was doing. So that's where property can be just curated to be such a wealth tool.
Absolutely.
And that's been a fantastic start for me. So, there's definitely opportunities, there's options, and it's just
exactly.
Yeah,
and it's and there's people always trying to time the market as well, but really it's like time in the market. Get in as quick as you can. And I heard something the other day which I really loved, and it was, if in doubt, zoom out. Because we're trying to doubt, is the market any good right now? When's the right time? And you just zoom out and look at it over the last 30 years and go, the market has always trended in a certain direction.
Absolutely.
Yes, it has its peaks and troughs, but if you zoom out and have a broad range and a broad view and have a long-term perspective on property, you're always going to get ahead.
Yeah, absolutely. I think all the numbers and the data kind of backs that as well. I know I get really caught up in trying to forecast and understand where things are going. Just unless you're an elite economist, I'm not sure. I definitely couldn't forecast. I'd be going related on what has the last 30 years tell us. So,
and the economists predicted a massive crash in property prices when COVID hit as well, and we saw the biggest growth wave in probably in history. So
absolutely,
yes, whilst looking at data is super important, I think jumping into any property is just a long-term view. Be very strategic. Obviously, make sure you pick your locations, make sure you pick the right builder, make sure you get the right lender. So obviously, you've got to be very rational when doing it. But if you can and it makes sense, pull the trigger.
And I think that's where Locale kind of comes into it as well, right? You may have a lender or another broker that doesn't have the relationship like our new home advocates or our property investment strategists that you can kind of bounce those ideas off as well, just to kind of get that end outcome, exactly what the client wants. And I think that's just so powerful as well, because I'm not an expert in builders, developers, that's the new home advocates. We've got some incredible people in the wealth team to really leverage and have a look at the kind of wealth strategy as well. It's all around getting experts in what we need to do as well.
Absolutely.
And that's
lean on people with the right experience that have been through it,
Yeah.
and understand it. And
absolutely.
like you said, make informed decisions. But
Yeah.
the worst thing you can do, and I believe that in everything in life,
Yeah.
is no decision is the worst decision. So get your facts, get your data, talk to some people that you trust. There's generally a feeling of someone that you want to work with, and then just pull the trigger.
Yeah. Couldn't agree more.
Are there any misconceptions about buying with a low deposit you'd like to clear up?
Yeah, the common one is, just wait to save that 20%. And I'll probably go back to your point around, time of the market, getting in the market, speed to market, those sorts of things. That's why low deposit options are there, is to actually get in the market and actually get the benefits of that capital growth. So I think that's one, is the time you save 20%, who knows where the market will be. Another one is it harder? It's more difficult? Not necessarily. It's not. Every lender has their own sets of policies, and it's about the broker and the finance job to ensure that where the needs of the client are actually met, and ensuring that it's a smooth journey for them. So that doesn't really come into play.
Yep.
But also around the lender's mortgage insurance. So we've got there's government schemes out there where you got a 5% no deposit LMI. 5% deposit, lender's mortgage no lender's mortgage insurance. You've got the Key Start, the 2% deposit options, you've got the guarantor options. There's just so many different options available these days that that's where the education piece with the brokers, I'm a really big advocate on ensuring that, they're educating as they're going through.
Absolutely.
Because I think that's just as important. So
knowledge is power. And
knowledge
I think
is
everyone
power.
feels comfortable with what they're getting into.
Yeah.
You feel more comfortable pulling the trigger, and pulling the trigger is generally the right result.
Absolutely.
So you just need the right people sharing the right information, so you feel empowered to make that decision.
And it is nerve-wracking, right? I don't know if back when you purchased your first property, like I was in banking, I was still nervous, overwhelmed.
Absolutely.
And, it does take a toll. So the biggest thing you can do is make someone comfortable, I feel. And when they're comfortable, and then that excitement just, like I said, that formal approval call comes through. So yeah, it's just making them comfortable and ensuring that they know we got their back as well.
I love that.
Yeah.
How do you work through understanding what a client can actually borrow and not just what the bank tells them they can borrow?
It's a really important question. It is a really important question. I think the most important part of a customer's journey with finance is sitting down with the broker and actually getting the needs and the objectives of the individual client. The reason I say that is the bank may say that you can borrow, say, $1 million. Your repayments are X amount. But say in 12 months, 24 months time, maybe this is your first time, you want to go traveling, or you have some it may be a big event, you may be getting married. There's things in your life that happen as an individual that you shouldn't be just tied into a maximum mortgage to basically tie you down for a 30-year term. So it's really just understanding our customers, our clients, and really understanding what's going to set them up for success. Conversations with friends and family, it's great, but every individual circumstance is different. So the importance is really thoroughly understanding the needs of a customer. And then once we understand that, actually, then we can build we can then put into structure the lending, put into a particular lender where it actually make them work, actually educate them, hey, if we reduce this to say 800, this will kind of increase your cash flow for your traveling, for your wedding. So it's not about giving up the things that you have in your life. We all want to do things. So I think it's just important to understand the needs of your customer.
Yep. And
then just kind of educating them along that journey as well.
Cool.
So I think another kind of option as well is we do have, there's credit cards, we're buying cars, things like that. And I think it's really important to understand as well, that's a big, big impact on your cash flow, but also the way that banks will look at you, because it impacts your servicing and how much you can actually repay.
Yep.
And that's another piece that is that education piece, is actually understanding, the strategic structuring. We had an example where we had a client with some high unsecured debt. wasn't enough equity to be able to put it in the house. They didn't have the cash available to be able to pay it out. But we worked with some really fantastic business partners here, and we kind of had a look at their current situation, put them in touch with a business partner in asset finance space, and was able to kind of reduce the interest rate on their existing unsecured debt, extend the loan term to increase cash flow, which then actually allowed them to do the home loan application. And then we've already discussed, we've got each settlement anniversary, 12, 24 months, we will revalue, see if we can then put it back into the home that way. But it's just around, don't always take a no as a no.
Absolutely.
And me coming from the banking where we had one policy to coming where we've now got 30 plus lenders, being able to provide different options for customers is probably one of the biggest key differences that I see coming from that sector into, the brokerage sector, which is just brilliant for customers.
Absolutely.
Brilliant for customers, because if you don't know, you don't know.
Absolutely. And we're dealing with hundreds of first-home buyers every year, and there's no example we haven't seen. So if you're feeling like you want to sit on the sidelines, or, you feel like you need to pay down your credit card or whatever that may be, come talk to a finance broker and actually understand where you're at, because you probably get in a lot quicker than you think you can. And that time out of market again, you're sitting out of market, the property prices are going up, that could cost you 50 or 100 grand while you're trying to pay down a $5 grand credit card. So through strategic things like refinancing and potentially shutting down credit cards, whatever that may be, we can get you into the market.
Absolutely. And we review, we go through your living expenses. It's a big piece of the application, ensuring that, your living expenses are realistic against what you can actually borrow. The brokers are kind of educating on certain things to get you to that end outcome.
So let's talk some lingo. As a first-home buyer,
we love our lingo.
Yeah. As a first-home buyer, you would hear borrowing capacity. What's that mean?
So borrowing capacity is basically the initial step to show how much you can borrow for a home loan. So borrowing capacity, each lender will have their own individual borrowing capacities, and that will differ on the amount you can borrow. And that's, again, another important factor on why a mortgage broker, instead of going directly to a bank, because it will be differences. So borrowing capacity takes into account your family situation. If you have children, it goes into your income. A big piece on income, though, each lender kind of assesses income differently depending on, what industry you're in. Is there overtime, allowances? Is there salary sacrifices? Not every income structure is the same. Not every income policy is the same as well. Again, another important piece. So you got your income, you got your liabilities, so your things like your personal loans, your credit cards, existing mortgages, that's all captured in there because it shows what your true monthly expenditure is. And then it goes into your living expenses, which is obviously the important pay, your day-to-day, your groceries, your insurances, your vehicles, absolutely everything that you do day-to-day outside of your kind of mortgages, credit cards, personal loans, including your utilities and things like that. So that's what they base their borrowing capacity off. And then it will give a number on what your maximum is. And then from there, it's just understanding, okay, where does it sit? Is there a particular lender that will accept, maybe this portion of income where this lender doesn't? So it's really just the initial stage to understand how much is achievable and realistic, really. Yeah.
So basically income coming in, your debts and liabilities, and it spits out a number basically saying this is what you can borrow.
I could have simply said it like that. Absolutely. That's
there we
exactly
go.
what
we
it
got
is.
there.
That's as simple as that.
Yeah. So what are the hidden costs buyers need to consider other than deposit?
So when we provide our kind of full overview, we show everything included. So whether stamp duty applicable, lender's mortgage insurance, government transfer costs. We also build buffers in for, your conveyancer, settlement agent, as I mentioned before. So everything that you see on the overview is basically what you will what will transpire in your loan contract. Probably a consideration though is your your costs after you've purchased. Once you move in, I think we forget about them, which I know I did. So, you got your things like your rates, your utilities, you got moving costs. So it's just ensuring that you, keep a little bit of a buffer for when that time comes as well. It's something we kind of get everything ready for the loan. And then, we just, no surprises when it comes to
sure.
it.
You don't want to be sitting on milk crates having dinner.
Absolutely.
Yeah,
absolutely.
That.
And, I have seen where there is, hidden fees, where it hasn't been as transparent. So one thing I'm very, very proud of is the fact that we are transparent. We want to give the full picture. And that's such an important thing.
I think it's crucial. Obviously, our business is like that customer for life model where we help them with finance, help them achieve their first home, and then ideally help them build a property portfolio if that's what they want to achieve. So we need to be transparent from day dot. And if we don't do the right thing, we lose trust right away. And trust is something you can't gain back. So for us, it's trying to tell people what they need to hear, not what they want to hear, being transparent. I'm a big believer if there's bad news, be really fast in communicating that bad news. Don't hide it from customers. And bad news could be anything from a bank's change policy or whatever that may be. It's just about communicating. But when we do communicate it, always have some sort of solution. And
Definitely.
Go, hey, there's been a policy change, but good news is we've done X, Y, Z, and we managed to keep it moving for you.
Spot on. And I think it's just, and it's a great point you raised, because we still want them in the driver's seat. We want them, involved in the process, in the driving seat. But we want to make it simple. And that's where we come in, right? So it's just, it's important that communication is such an important thing to me. My wife would tell you, any kind of customer service, if they come back to me and it's like efficient, but you know me in customer service, I do like this communication. It's just something that builds trust straight away. Because there's a lot of promises that are given, but actions speak louder than words.
Absolutely.
So, it's such an important thing. Make sure they're feeling comfortable along that journey.
Are there any other services your team can provide for a first-time buyer?
Yeah, I think one of the things that I love to see here is if a customer's not ready, we will support them get ready. So what I mean by that is, we'll provide us a savings template. We'll provide a bit of a savings strategy, what they need to do based on their cash flow of a borrowing capacity of how much they'll need to save for a 700,000 package, let's say. So we check in, quarterly, however regularly we need to. We give them a bit of a timeline of how long it would take X, Y, Z. And we consistently check in for the pure fact of just seeing if things happen, goalposts move. So it's just ensuring that we are with them every step of the way. It's not about just getting, like I said, that quick win. We've had customers on the savings plan for the last 12 months that, in the next couple of months will be ready to buy their home. So it's that full journey actually from here to get into their first home. And that's just as important as holding a appointment with a customer who's ready to go right now.
Absolutely. And like I said earlier, it's so important if you're thinking about buying a home, talk to someone as soon as possible, someone that's willing to help, that is, because they'll put you on the right path. And that could save you months, it could save you years, and the quicker you get into the market is crucial.
And I think the other thing as well is, we can have a look at your credit file without putting a mark on your credit file. Let me just caveat that. But we can also have a look and see where things are at. And I wouldn't have known what my credit file was if I didn't know how to find it myself. So I think it's important for that aspect as well. We look through your living expenses. There's certain transactions that lenders don't like to see. We can kind of educate on why. Payday loans, for example, is another big one we're seeing. Lenders just won't touch them. Things like cash converters, because what's that portraying is you're getting paid, but you needed money before your actual pay date. So they're high risk.
Absolutely.
But there's all those kind of key things. And it's always personalized. It's individual. It's not one size fits all. And that's also what I love about the role. It's forever changing. You're forever learning. So I think it's just as important to come see us today, even if you feel you're not in a position, because if you're not, we'll get you to that position.
Absolutely.
Yeah.
Another one is we see a lot of clients jump again and buying cars and getting car loans as well. So if you're thinking about buying a property and you're also considering buying a car, talk to a broker before you buy that car.
Absolutely.
It's crucial because we've seen so many people that have gone out and bought that dream car and it's wiped their home ownership dreams for a couple of years. So how valuable is that car? You could get something a bit smaller, half the price, but you get into the property market, you're in the market, you bought a property, you then bought your second property, you can go buy a bloody car in cash with the equity release because you're on the property market. So make sure you're prioritizing assets that are going to accumulate wealth.
Yeah.
Talk us through good debt versus bad debt.
I'll start with bad debt. And to your point before, they say that your personal loan, say you got a 30,000, they say that will impact your borrowing capacity by 5x. So let's say 150,000. So it's a good point you make, because it could be the difference between your first home or not.
Yeah, absolutely.
And talking about good debt, bad debt, your vehicles, for example, are depreciating assets. Everyone knows it. That old saying, as soon as you drive it out of the showroom, it drops X amount. So you're getting a debt for a car that's depreciating, which means you're actually opening yourself up with a loan amount that's actually more than the security that you hold. So things like that, unsecured debt, things that are not actually creating any wealth or increase asset value for you. So let's put property. We know where the market's at. You get a loan against that property, the growth, and then you look at where your actual end debt is. And that's where you create real wealth, is the difference between the two and that kind of capital growth.
Which is what we call equity.
Exactly right. What we call equity. So basically it's just around, you're financing an asset that will make you money, instead of financing something for a joyride that is depreciating. I do have an example of that, actually. I was 25 and I had I really just wanted like a flash car, as you do at 25. I finished at the bank one day. I drove to Barbagallo. I was on the phone to Amy, my wife. I was like, I'm just heading to Barbagallo. She's like, why are you going there? I said, I just want to look at this car. Found a car. It was like this wanky Mercedes convertible. Came home with it, drove home, got it there. Finance a portion of it, because I'm like, yeah, that's fine. I'll keep a bit of cash. Finance a portion of it. It lasted 6 months. I thought I'd lost the key once, and it was $2,000 for the key. That right there, that moment right there, made me realize, why am I holding on to? I lost $6,000 within 6 months on a depreciating asset. So we all make mistakes. We all enjoy those flashy cars, but I think it's just being realistic and kind of prioritizing what is most important to us.
Absolutely. Yeah, the dopamine of driving out that new car is there for probably a month, and then you realize you're stuck with that car loan for probably 5 to 7 years.
Yep.
And you're paying, by the time you get on a $30,000 car loan, you may be paying $40,000 down or more by the time you pay down that loan, and the car's probably worth $5,000 by the time you paid it off.
Absolutely.
So you paid $40,000 for something that's worth $5,000 at the end.
Yep.
So economically, the economics on that isn't great.
Yeah.
So,
and I do say thank you that you thought it was a month. It was about 48 hours until I drove past somewhere and there was windows, and I saw myself in the mirror. And then I was like, yeah, I'm not really sure why I made this purchase. But yeah, we'll go a month. Yeah.
Perfect. So for people that are feeling overwhelmed, what's one piece of advice you'd give?
Yeah, that's a really good question. My biggest piece of advice is, just because you're feeling nervous or unsure now, doesn't mean you shouldn't reach out and actually be curious, ask questions, understand, get the knowledge you need from the experts. I think it's so important, because the more we're overwhelmed, the more we're nervous, the more we feel we may be asking silly questions. That's not the case at all. It's just around education and understanding on what your current situation is and how we can kind of get you to, your first home, and how long that potentially will take. I think it's just about, every individual circumstance is different. Don't compare yours to a friend, family, whoever it may be. You don't know the full financial picture or the full picture. So just reach out, ask the question, and just get someone on the journey that has your back, really. And we'll be there from house one all through to hopefully a property portfolio of 15 to 20. So yeah, it's just ask the questions and get the education that you need. You don't pay for it, so you might as well leverage the service.
Absolutely. And there's no situation, it's very rare that we get a situation that we haven't seen before. So
absolutely,
there's zero shame in, hey, I've got no deposit, I won't waste their time and talk. Like, we deal with that every single day, and you'll be surprised how quick we can come up with a solution for you. So the decision's completely yours. The advice is free. Grab it, take it. And if you decide to not move forward, that's totally okay too.
Absolutely.
You're feeling more empowered, and the decision you made is something you feel well informed with.
Yeah, don't feel there's pressure. Once you feel pressure, you make decisions rushed. And I think it's just that comfort, and that comes down to knowledge is power. feeling comfortable. You mentioned before around being comfortable with the repayments if they can borrow this much with a bank. You need to be comfortable, and you only get that by asking questions and understanding. So never feel pressured, never feel like a decision's out of your hands. It's always your decision. And just always continue to ask questions. And if you feel unsure, ask them again. Yeah.
Well, thanks for coming along today, Brad, and
Thanks
thanks
for
for
having
sharing
me.
your insights and that weird story about the convertible. I won't judge you on that, but
I feel you already have. I already regret that decision, just like the car. But no, I really appreciate it. And yeah, absolute pleasure to be here.
thanks, mate.
Thanks, mate. Cool.
If you found today's episode helpful, please follow us for more insights on how you can find your perfect place. Thanks for tuning in. We'll see you next time.